In 1944, leaders from around the globe met in Bretton Woods, New Hampshire. They had just survived a global depression and a devastating war, and they wanted a system to prevent that kind of economic collapse from ever returning. They sat down to draft a literal blueprint for the post-war global economy. That blueprint created two massive, interconnected pillars to support the world's finances: the International Monetary Fund, or IMF, and the World Bank. The IMF acts as a global financial monitor. It tracks how currencies are doing around the world and steps in with emergency cash when a country runs out of foreign money to pay its international bills. The World Bank has a different job. It acts as an engine for development, focusing on reducing poverty and helping nations build strong, self-sustaining economies. These two pillars are built to work together. In fact, a country has to join the IMF before it is even allowed to join the World Bank. Together, they form a unified safety net for global stability. When people say the World Bank, they are talking about an entire campus. The World Bank Group is made up of 5 highly specialized branches. The IBRD borrows on the open market and lends to middle-income countries for large projects like roads and power grids. The IFC and MIGA focus on the private sector, providing loans and insurance to help businesses invest and grow safely in developing nations. The fourth branch, ICSID, is the official courthouse of the group. If a government and a private investor have a disagreement, this is where they go to resolve it. Finally, there is the IDA, the International Development Association. This is a specific fund dedicated exclusively to the 75 to 78 poorest countries on Earth. From paving public roads, to ensuring private businesses, to settling legal disputes, these 5 branches provide the complete architectural toolkit a developing economy needs to get off the ground. Let's look closer at the IDA. Because it serves the poorest nations, it doesn't offer standard bank loans. Instead, it provides highly discounted aid, consisting of direct grants and loans with little to no interest, that can be paid back over 50 years. The IDA's hybrid funding model pulls from 3 places: wealthy donor contributions, internal World Bank profits, and open market bonds. By combining these streams, the IDA multiplies its dollars, turning donor contributions into a massive $93 billion funding package in its 20th replenishment cycle. Now the organization is planning its 21st cycle, IDA 21, rallying around a single goal: ending poverty on a livable planet. To hit that target, IDA 21 directs its funding into 5 specific areas: people, planet, prosperity, infrastructure, and digital transformation. And as they review every new project, they look at it through 4 specific lenses. Does it support gender equality? Does it create jobs? Does it encourage private investment? And does it help areas facing fragility and conflict? By directing these discounted funds through this strict framework, the IDA turns global donations into concrete, life-changing resources for the populations that need them most. This flow of money introduces a serious tension. How do we fund rapid growth in poor countries without burying them under debt they cannot repay? The IMF and World Bank share a safety tool, the Debt Sustainability Framework, or DSF. It projects a country's debt burden 10 years into the future, testing its survival against financial shocks to assign a risk rating: low, moderate, or high. These ratings directly control how the IDA hands out money. A low-risk country receives standard long-term loans. A moderate-risk country gets a mix of loans and grants, and a high-risk country receives its entire allocation as direct grants, ensuring it doesn't accumulate another dollar of debt. The Debt Sustainability Framework acts as the crucial safety valve on the entire system, guaranteeing that the push for rapid development doesn't accidentally trigger a financial collapse for the world's most vulnerable economies. We have built a deeply interconnected system. The IMF stabilizes the global currency floor. The World Bank Group builds the economy upward. The IDA targets resources to the absolute poorest. And the DSF protects those nations from the weight of their own debt. It takes a lot of complex math and heavily negotiated multi-billion-dollar replenishments every 3 years to keep the machine running. It requires active cooperation from governments all over the world. What started in 1944 is an active, living mechanism. It is a cooperative global blueprint designed to systematically build a stable, prosperous world where poverty no longer exists.